Hello, my name is Mark Cornell, and I am the Deputy General Counsel for the New Hampshire Supreme Court's Attorney Discipline Office. Today, we are going to be reviewing some common issues or problems that can happen with attorney trust accounts. While these materials focus on the rules in place in New Hampshire, the general concepts are applicable in most states. This program is intended to provide an overview of an attorney's obligations regarding trust accounts. A future program will cover the nitty-gritty, day-to-day handling of trust accounts. This program is intended to provide 60 minutes of continuing legal education credits. New Hampshire attorneys will need to enter the credits into the Attorney Reporting Tool, or ART. If you are looking to receive CLE credits for another state, you will need to take whatever steps are necessary to obtain credit in that state. It will probably be helpful to maximize the size of the video playback during this presentation, as some of the slides contain a fair bit of information. Before we get started, I want to direct the audience to the written materials that are available to supplement this presentation. The New Hampshire Attorney Discipline Office has prepared a Client Trust Account Guidelines book. This book benefited greatly from the materials prepared by several other attorney discipline offices around the country, for which we are very grateful. This book is available on the Attorney Discipline website. The book contains an overview of the rules regarding trust accounts and an explanation of how to reconcile an IOLTA account. In addition, the booklet contains a sample reconciliation and blank sample forms that you can use for yourself. This booklet and the PowerPoint slides constitute the written materials for this CLE presentation. A lawyer has a number of duties when holding money or property in trust. An IOLTA or other trust account is a fiduciary account, and the attorney has a fiduciary relationship with the owner of the money or property held in trust. This creates several duties for the lawyer. During this presentation, I'm going to be using the phrases IOLTA account and trust account somewhat interchangeably. As a basic matter, an IOLTA account is a trust account for attorneys to hold pooled client funds. First, the lawyer has a duty to keep client or third-person money or property separate from the lawyer's own property to protect the money and property from actual or potential loss. The lawyer has a duty to promptly provide a complete accounting to the client or third-person owner of the money or property. The lawyer has a duty to maintain complete records of trust account funds and other property held in trust for 6 years. The lawyer has a duty to promptly notify clients or third persons when the lawyer receives money or property that the client or third person has an interest in. This is so the client or third person can make decisions as to what to do with their property. The lawyer has a duty to promptly pay or turn over to the client or third person any money or property that the client or third person is entitled to receive. If there is a dispute as to who is entitled to the money or property, then the lawyer must address the issue promptly while the disputed portion of the money or property remains in trust. Finally, the most important duty the lawyer has is to maintain the integrity of trust property. The lawyer may not use trust property for any purpose other than as directed by the client or the third person who owns the property. This encompasses not just theft and conversion, but any short-term use of the money held in trust. For example, if an attorney disperses funds to a client before depositing the source of those funds into the IOLTA account, that attorney has used another person's funds to pay the client and has violated their duty to preserve the integrity of trust property. The basic trust rules for operating the trust account is that it is for client or third person money only. It is not your money. Period. End of discussion. New Hampshire Supreme Court Rule 50 states that an IOLTA account can only be used to hold funds of clients or third parties received by an attorney in connection with the representation of a client. The IOLTA account cannot be used to hold the lawyer's money or money that belongs to a third party which is not connected with a representation. If you are collecting money from a bunch of friends so that you can make a group purchase of Red Sox tickets, don't hold the money in your IOLTA account. There is one exception to the rule against an attorney keeping their own money in the IOLTA account. An attorney may keep money in an IOLTA account in an appropriate amount to cover bank fees. For most firms, this would be a couple $100s or less. As a side note, please do not refer to the bank fees ledger card as the slush fund or something similar. This can make the Attorney Discipline Office somewhat twitchy. Please note that the funds kept in the IOLTA account for bank fees must be tracked by maintaining a separate record or ledger card for those funds. So let's talk a little bit about the information that should be included with every transaction into or out of your IOLTA account. The general rule is that the attorney should include enough information with every transaction to allow the attorney or a third party to determine why this transaction occurred. The better the audit trail, the easier it will be to solve trust account related problems should they occur in the future. All transactions must be documented in such a way as to allow someone to determine what happened. The attorney's records for every transaction must include enough information so that your future self, or an auditor from the Attorney Discipline Office, can determine what client or matter the transaction is associated with, the amount of the transaction, and the purpose of the transaction. For example, if an attorney is writing a check for a court filing fee, include enough information on the check to associate the transaction with a matter. For example, include the client name, the case name, or a matter number in the memo section of the check. The purpose of this is to allow you to reconstruct the transaction even years later. An attorney may never make a cash withdrawal or write checks payable to cash. In addition to being specifically prohibited by New Hampshire Supreme Court Rule 52C5, a cash withdrawal does not allow for an appropriate audit trail. Every transaction in the IOLTA account must be listed in the Receipt and Disbursement Journal, or in plain English, the check register. The Receipt and Disbursement Journal is a list of every transaction in and out of the IOLTA account. Every transaction must also be listed on the client or matter ledger card associated with that transaction. A transaction must never result in a negative balance on a ledger card. If a client has $300 in the IOLTA account and the client incurs a bill of $400, the attorney cannot pay $400 out of the IOLTA account towards the legal bill. Doing so would result in a negative balance on that client's ledger card, even if it doesn't result in the IOLTA account being overdrawn. Let's take a look at a sample check register or receipt and disbursement journal. On the screen is a sample receipt and disbursement journal for the law firm of Manny, Moe, and Jack. Notice that it lists every transaction into and out of the IOLTA account for all clients. The purpose of the receipt and disbursement journal is to record all of the transactions into and out of the IOLTA account and to track the total amount of money in the account. In the sample check register, notice that we include information as to what client or matter each transaction is associated with. This will make it much easier to find and correct any mistakes in the future. On the screen now is a is a sample client ledger card for the law firm of Smith & Smith. Notice that this client ledger card contains all of the transactions that relate to the John and Maria Jones divorce. In addition to all of the transactions for this matter being listed on this ledger card, every one of these transactions would also be listed in the check register for the IOLTA account. A ledger card is effectively the check register or receipt and disbursement journal for just one client or matter. If someone were to take all of the ledger cards for the IOLTA account and combine them, the result would be the check register. Let's talk about the rules for deposits into the IOLTA account. All deposits must be intact. A deposit may not be split and deposited into more than one account. For example, if a client gives the attorney a check for $5,000 and the client has an outstanding bill for $1,000, the lawyer cannot deposit $1,000 into the operating account to pay the bill and $4,000 into the trust account. Instead, the lawyer must deposit the full $5,000 into the trust account and then write a check from the trust account to the operating account to pay the $1,000 bill. Similarly, if a lawyer receives funds as the proceeds of a collections case, an award for a personal injury claim, or something of that nature, the lawyer must deposit those funds into an IOLTA account in gross. Once again, a deposit cannot be split into two accounts. As mentioned earlier, include enough information with each deposit to allow someone to reconstruct the transaction in the future. Two-part carbonless deposit slips or computer-printed deposit slips that have a bottom information stub are ideal for maintaining a copy of the deposit. Let's take a look at a sample deposit slip for an IOLTA account. Notice that the deposit slip is clearly designated as being for an IOLTA account. Underneath the name of the law firm, it says Client Trust Account. Always check to make sure that you are depositing money into the correct account. On the sample deposit slip, we have listed the deposits by client name. Since most deposits will be accompanied by checks containing the client's name, including the client's name on the deposit slip is not going to disclose information protected by Rule of Professional Conduct 1.6. However, if the identity of the client falls within the scope of Rule 1.6, then some other identifying information should be included instead on the deposit slip. Alternatively, the firm can make a copy of every check in the accompanying deposit slip and keep the copy with the firm's banking records. Let's talk about some basic rules about when you can disperse on deposits. Once funds have been deposited into the trust account, when can the funds be dispersed? If the deposit is cash, a bank cashier's check, a certified check, or electronic transfer of funds, funds can be dispersed when the financial institution acknowledges receipt of the funds and makes the funds available. If the deposit is in any other form of payment, such as a personal check, funds can be dispersed once the deposit clears into the account and the financial institution has made the funds available to you. There is an important difference between a financial institution making the deposited funds available and the deposited funds clearing into the account. A financial institution will often make deposited funds available before they have cleared into the account. Even with good funds, such as a cashier's check, a financial institution may not make the entire amount of the deposit available immediately. It is the attorney's obligation to know what their financial institution's rules are regarding funds availability. If you have a doubt about the matter, contact the bank They will be able to tell you when the funds will be available. Accepting retainers or other payments into an IOLTA account via a credit card creates a number of potential issues that the attorney should be aware of. The New Hampshire Bar Association Ethics Committee has prepared an Ethics Corner article that was published in the March 16, 2016 issue of the Bar News. A copy of this article is available on the New Hampshire Bar Association's website. This Ethics Corner article covers a number of potential issues regarding using credit cards to pay retainers, and I'm going to focus on the issues highlighted in the article that deal with IOLTA accounts, but I would suggest that you obtain and read a copy of the article yourself. When a business accepts payment by credit card, there is a merchant or processing fee associated with the transaction. A portion of the transaction is normally deducted from the amount paid to the business. For example, if someone pays $1,000 on a credit card, the business will only receive something in the range of $980. This raises a couple of issues as it relates to retainers being paid into a trust account. First, is the client going to pay the processing fee, or will the law firm pay it? This may be prohibited, having the client pay the processing fee, may be prohibited by the terms of the agreement with the lawyer's credit card processing company. Second, it would certainly need to be disclosed to the client, who probably has an expectation that a $1,000 payment will result in $1,000 being deposited into the IOLTA account. Alternatively, the attorney can pay the processing fee, but will need to make sure that the processing fee is not withheld from the credit card payment or is otherwise handled in a way that does not result in the account being out of trust. Accepting payment by credit card also raises the risk that the credit card holder will dispute the payment to the law firm. If the credit card processor processes a chargeback, it would normally result in funds being withdrawn from the IOLTA account. If that specific client funds were no longer in the attorney's IOLTA account, the chargeback would be paid out of other clients' money in the IOLTA account. This is obviously a very serious problem. When selecting a credit card payment processor, learn how this issue is handled. Probably the safest method of handling this issue is to have any chargebacks come from the firm's operating account. The New Hampshire Bar Association has a recommended credit card processor that the Bar Association believes appropriately addresses the special issues that attorneys face when accepting retainers via credit cards. This information is available on the Bar Association's website. So, when shouldn't you use an IOLTA account to hold funds that are being held in trust? The vast majority of the time an attorney is holding money related to a representation, those funds will be appropriately held in an IOLTA account. However, there are times that an IOLTA account is not the appropriate account to deposit funds into. The New Hampshire Ethics Committee has recently addressed this issue of when an attorney must use a non-IOLTA trust account to hold funds related to a representation. In an Ethics Corner article dated May 19, 2021, entitled Defining Nominal Amount and Time Frame for Separate IOLTA Accounts, the committee provided some valuable guidance. Once again, this article is available on the New Hampshire Bar Association's website. The Ethics Committee suggested that the lawyer consider the administrative cost of setting up a separate trust account versus the income that the trust account would generate. As of the date of this program was prepared, interest rates paid on deposit accounts are between 0.01 and 0.05%. At least as of today, the amount being held in trust that would need to be significant before opening a separate trust account would be required. Otherwise, the amount of interest paid simply just wouldn't be worth the administrative costs. The Ethics Corner article suggests that it is appropriate to charge the client an administrative handling fee for setting up and handling the account. Any such fee would need to be reasonable and disclose to the client in advance to comply with Rule 1.5. Having spoken about how to deposit money into the IOLTA account, let's talk about taking money out of the IOLTA account. On the screen now is a sample check written on an IOLTA account. The check clearly indicates that it is for the IOLTA account. Once again, under the name of the law firm, it says IOLTA account. This can be helpful to avoid an out-of-trust situation caused by using the wrong checks. So always check to make sure you're using the correct check stock before you write a check out of your IOLTA account. The check is made payable to a named payee. In this case, the check is payable to the law firm for earned fees. Finally, the memo section lists the client or matter that the check relates to. By putting the client or matter name on the check, it will be easier to follow the transactions in the IOLTA account, and it will help you discover and solve IOLTA account issues. Once again, it's all about creating that audit trail so that later, if there's a problem, you can figure it out. I want to review a few basic rules about making payments from the trust account. Whenever a check is written out of an IOLTA account, the lawyer should confirm that the client has sufficient funds on their ledger card before signing the checks. If the checks are being prepared by an employee, the lawyer may want to personally review the client ledger card for each check just to make sure that it doesn't result in an overdraft situation, and also that the check is being listed on the client ledger card. All payments for earned fees should be payable to the lawyer or the law firm. Do not pay office or personal bills from the IOLTA account, even from earned fees. If the ADO sees a check written from an IOLTA account to Cumberland Farms, we are probably going to be reviewing that attorney's IOLTA account records very carefully. Take the money out of the account when it's earned, then pay the bills. As previously mentioned, cash withdrawals and checks payable to cash are expressly forbidden. One of the fundamental rules of trust accounting is that the lawyer is responsible. The lawyer is always responsible for the handling of the IOLTA account. Only a lawyer admitted in New Hampshire or an employee who has been bonded can be a signatory on a trust account. It is not unheard of for sole practitioners to have a non-attorney as a signatory on the trust account, but the employee must be bonded or have equivalent insurance. Even if a lawyer has an employee who is handling the transactions in the trust account, the lawyer is responsible for those transactions and ensuring that the trust account is being maintained in compliance with the rules. While the day-to-day handling of the trust account can be delegated, the responsibility for ensuring that the trust account rules are followed cannot be delegated. If the lawyer is not reconciling the IOLTA account themselves, the lawyer must review and understand the monthly reconciliations that are prepared for him or her. This is one of the most troubling, avoidable mistakes we see at the Attorney Discipline Office. There are too many lawyers who don't understand what is required in terms of IOLTA account reconciliation. These lawyers assume that the bookkeeper knows how to conduct a three-way reconciliation. When the bookkeeper gives them a copy of the monthly reconciliation report, they assume it was done correctly and in compliance with the rules. This is not always correct, and one should not assume that their bookkeeper knows how to reconcile an IOLTA account, even if that bookkeeper advertises in the bar news. There are a number of record-keeping rules associated with IOLTA accounts. New Hampshire requires that lawyers keep the records and supporting documentation of all of the monthly reconciliations for 6 years. These records will include bank statements, the check register or receipt and disbursement journal, the client ledger cards, and any accountings to clients or third persons showing the disbursements of funds to them or on their behalf. Attorneys should also keep billing records as part of the supporting documentation. These records are evidence that the attorney earned the fees that were withdrawn from the trust account. It is important to develop good habits regarding storing your IOLTA account records. I suggest that every month when reconciling the IOLTA account, you print out copies of any electronically generated reports. If they're paper reports, make a copy. Staple the reconciliation reports to the bank statements they are associated with and store them in a binder in chronological order. Don't just toss them in a desk drawer or a folder. Include a copy of the monthly bills and settlement statements for contingent fee cases with the reconciliation reports. If you are ever selected by the ADO for a compliance check of your IOLTA account, everything will be in one place and easy to provide. You'll just need to pull the binder out and hand it to us. Make sure to keep a backup of all computer data that relates to your IOLTA account and keep a copy of the backup either off-site or on the cloud. If you have a paper system, keep the copy of the records off-site or scan them and maintain an electronic copy. I want to review the basic rules for reconciling an IOLTA account. This section is intended to provide an overview of how the account is reconciled so that the attorney can ensure that their IOLTA account is being properly reconciled. The IOLTA account must be reconciled every month. In addition to being required by Supreme Court Rule 50, reconciling the IOLTA account every month makes it easier to find potential mistakes. After a few months have gone by, it becomes much more difficult to find these mistakes. The first step in reconciling the IOLTA account is to reconcile the balance according to the bank statement with a balance according to the check register. This is the classic monthly reconciliation that should be done with all the firm's bank accounts by whomever does the bookkeeping. The second step in reconciling the IOLTA account is to reconcile the total amount of funds listed on all of the ledger cards with a balance according to the check register and the bank statement. In plain English, the total of the ledger cards must be equal to the balance in the account as of the effective date of the reconciliation. Once again, every transaction in the IOLTA account must be associated with and listed on the ledger card. On the screen now is a sample reconciliation for the law firm of Manny, Moe, and Jack. The reconciliation report compares the ending balance from the bank statement with a balance in the check register or transaction log. To perform this reconciliation, we take the ending balance from the bank statement, add in any deposits that were made after the closing date of the bank statement and hence are not on the bank statement, and subtract any checks that have not yet cleared the account. This should equal the balance in the check register. Notice that you do need to keep track of all the uncleared checks in order to do this. The goal is to compare the amount of money the bank thinks is in the account with the amount of money that you think you have in the account to make sure they're the same. I'm going to refer to this as a one-way reconciliation. This is the basic reconciliation that is done with every business account. If this sample report on the screen looks like what your bookkeeper is giving you for the IOLTA account, the account is not being reconciled as required by Supreme Court Rule 50, which requires a three-way reconciliation. A three-way reconciliation is what's on the screen right now. A three-way reconciliation also compares the balance of the ledger cards with a balance according to the bank statement and check register. A three-way reconciliation has the added steps of making a list of all of the client ledger cards with balances as of the date of the reconciliation and adding up those balances. This total must equal the balance in the check register, which has already been reconciled with the balance in the bank statement. This is a three-way reconciliation that meets the requirements of Rule 50. This is what your bookkeeper should be giving you every month. While reviewing the reconciliation report, you should look at the list of uncleared transactions. On the report on this screen, notice check number 2087 dated January 1st, 2017 in the amount of $38. Since this report was prepared on June 8th, 2020, this check is now over 2.5 years old. Any checks that have been outstanding for more than a few months are potential problems and should be investigated promptly to determine why the check was not cashed. You do not want to be in a position of looking at check number 2087 for $38 being uncashed in the year 2030 while you're trying to close your office. Deal with these problems promptly. Whoever is reconciling the IOLTA account should be preparing a report that contains the same information that is in this report. I'm going to point out something else on this slide. Notice that there is a separate ledger card for Manny, Mo, and Jack bank fees in the amount of $208. It's listed with all the other client ledger cards and is treated just like a client ledger card. This is the law firm's money that is kept in the IOLTA account to pay bank fees that might be charged to the IOLTA account that we discussed earlier in the presentation. There is also one more possible wrinkle that is not included in this example. If the bank deposits interest into the IOLTA account and transfers the interest out of the IOLTA account the following month, a separate ledger card will be needed to track the interest being held in the IOLTA account. However, if the bank transfers the interest to the Bar Foundation the same month that the interest is deposited into the account, then a separate ledger card for interest is not required. It would always have a balance of zero by the end of the month if the bank transfers it out the same month is paid. Depending on the number of transactions going through the IOLTA account and the technological sophistication of the lawyer, there are a number of ways an attorney can handle the record-keeping requirements of an IOLTA account. An attorney can use a manual paper-based system. The trust account booklet contains sample forms for a manual system. This is really only appropriate for those who do not have a large number of transactions going through their trust account. Manual systems do not provide the error checking systems available with some computer software solutions. In addition, there is no protection against arithmetic errors. However, a manual system does have the advantage of being free and relatively easy to use as long as the number of transactions do not get to be excessive. Many attorneys track their IOLTA account using Excel spreadsheets or a combination of a manual system and Excel. While Excel spreadsheets avoid arithmetic errors, this solution does require some knowledge of Excel and does not have any protection against errors such as failing to list a transaction on a ledger card. QuickBooks is the most common small business accounting solution used in the USA. QuickBooks can be used to handle IOLTA accounts, and it does have the advantage that every accountant in the country is familiar with it. There are also several excellent resources available for using QuickBooks to handle law office accounts, including IOLTA accounts. Unlike specialty trust accounting software, it does not contain much in the way of protections against user mistakes. For example, it is easy to write a check without associating it with a client ledger card. In addition, QuickBooks does not prevent the writing of a check that will result in a client ledger card having a negative balance. However, the big advantage of QuickBooks is there's a good chance your office is already using it to handle the regular accounting, and it can work as long as the attorney maintains reasonable precautions. Finally, there's specialty trust accounting software. This software has the advantage of having built-in safeguards that will prevent users from writing checks in excess of the amount held in trust or writing checks not associated with a ledger card. The downside of this solution is, number one, the cost of the software. Number two, your accountant may not be familiar with it, which may make it difficult for your accountant to assist you if there's a problem. And three, it will require learning a new software package. Obviously, the best solution for any lawyer or law firm is going to depend on a number of factors, and this is a decision that's going to require some careful consideration. When opening a new IOLTA account, there are a number of decisions the attorney needs to make. First, the IOLTA account must be opened at a participating financial institution in New Hampshire or in a neighboring state. The Bar Association maintains a list of eligible financial institutions. Some financial institutions pay a higher than market rate of interest on IOLTA accounts. These institutions are listed as Leadership Circle or partner institutions on the Bar Association website. Obviously, the Bar Foundation, which receives the interest from the IOLTA accounts, would appreciate you putting your account at one of these institutions. Ideally, the IOLTA account should be at the same bank as the firm's operating account. This will avoid problems with payments not clearing into your operating account promptly, as well as a few others. The IOLTA account will use the Bar Foundation's taxpayer identification number. That information is available to the bank in the information they have on how to open an IOLTA account. I strongly recommend that the checks that you use for your IOLTA account be a different color than your operating account checks. This will provide one more safeguard to help avoid using the wrong checks, resulting in an out of trust or other problem. Use duplicate deposit slips or computer printable deposit slips with an information stub so that you will have a copy of all deposits into the IOLTA account. Finally, if you have a multi-state practice, you must have a separate IOLTA account for your New Hampshire clients. You cannot use your Massachusetts IOLTA, your Maine IOLTA, or your Vermont IOLTA account for a New Hampshire client. So how does the Attorney Discipline Office learn about trust account issues? We learn about them from self-reports. If an attorney has an issue with a trust account that results in the account not being in compliance with Rule of Professional Conduct 1.15 or Supreme Court Rule 50, the best practice is to notify the Attorney Discipline Office promptly. The Attorney Discipline Office receives a few self-reports for trust account issues every year. The vast majority of these self-reports are for honest mistakes that the attorney promptly corrected. In those cases, the Attorney Discipline Office acknowledges receipt of the self-report and may provide some advice about avoiding similar problems in the future. Even if the self-report results in potential discipline, the fact that the attorney self-reported the problem can result in a significant reduction of the discipline imposed. However, the vast majority, as I stated earlier, are for honest mistakes which do not result in discipline. New Hampshire Supreme Court Rule 51C4 requires financial institutions to send the Attorney Discipline Office a copy of any overdraft notice for an IOLTA account when it is sent to the lawyer. I recently spoke with a bank's compliance officer regarding this rule. Please do not yell at your banker for sending the Attorney Discipline Office the overdraft notice. The bank is just complying with the rules regarding IOLTA accounts, and you are required to disclose circumstances when your account is out of trust or when there has been an overdraft. This is done by lawyers because they are required to inform the Supreme Court of any out-of-trust incidents or other failures to comply with Rule 1.15 or Supreme Court Rule 50 on their annual trust account compliance certificates. I strongly urge anyone with a potential issue to submit a self-report promptly instead of waiting to disclose the issue on the TAC form. It will be much easier and quicker to explain what happened when it is still fresh in your mind. Supreme Court Rule 50A1C authorizes the Supreme Court to appoint an accountant to conduct compliance checks. New Hampshire Supreme Court Rule 50 requires that every attorney and law firm that maintains a trust account file a trust account compliance certificate as part of the annual attorney license renewal process. This certificate attests that all trust accounts were maintained in compliance with Supreme Court Rule 50 and Rule 1.15 of the Rules of Professional Conduct. When an attorney signs the trust account compliance certification, this is a representation to the New Hampshire Supreme Court that the attorney has read and understands Rule 1.15 and Supreme Court Rule 50, and that all trust accounts maintained by the attorney or law firm have been in compliance with these rules based on the signing attorney's personal knowledge. This is a representation to the state Supreme Court. If the statement is not true, that is a misrepresentation to the state Supreme Court, which is a separate and very serious violation of the rules of professional conduct. It should go without saying that lying to the state Supreme Court is a bad thing. One more thing to note. The trust account compliance certification form applies to all trust accounts, not just IOLTA accounts. Law firms may submit a single trust account compliance certification for all attorneys at the firm. What about the non-signing members of the firm? Can an attorney avoid liability for a false trust account compliance certificate filed on behalf of the firm by another member of the firm if the attorney knows that the certificate is false? Rule 8.3a, which covers reporting professional misconduct, states a lawyer who knows that another lawyer has committed a violation of the rules of professional conduct that raises a substantial question as to the lawyer's honesty, trustworthiness, or fitness as a lawyer in other respects shall inform the appropriate professional authority. I will suggest to you that lying to the Supreme Court about whether or not a trust account is in compliance with the rules is a violation of the rules of professional conduct that raises a substantial question about a lawyer's honesty, trustworthiness, or fitness as a lawyer. The takeaway from this is that an attorney who knows that their firm's IOLTA account is out of trust cannot avoid potential discipline by being the non-signing attorney for a false tax form. So what kinds of relatively minor, avoidable IOLTA account problems do we commonly see at the Attorney Discipline Office? Often, overdrafts and out-of-trust situations occur because the law firm used the wrong checks when writing checks. The attorney meant to write a check out of the operating account, but inadvertently used a trust account check. This issue also occurs when law firms have multiple trust accounts and inadvertently use the checks for the wrong trust account. Law firms that handle real estate closings or practice in more than one state often have more than one IOLTA account, and this is an issue that comes up a few times every year before the Attorney Discipline Office. Not knowing the funds availability rules for the bank which holds the IOLTA account. As I mentioned earlier, a bank is not obligated to make deposits available immediately. Even if the deposited funds are available, that does not mean the checks have cleared into your account. Know the difference between the funds being available and the funds clearing into the account, and don't disperse prematurely. This is an issue that comes up several times a year at the ADO as well, often in the context of a real estate closing. While scientists will tell you that the fastest speed an object can travel is the speed of light, they clearly have never been to a real estate closing and seen a commission check handed to a realtor. Nothing travels faster than a realtor to the bank. Failing to keep an appropriate amount of the attorney's own money in the IOLTA account to cover bank fees. Rule 1.15b explicitly allows this, and I would urge every firm to keep an appropriate amount of money in the IOLTA account for these bank fees. You do not want to be in an out-of-trust situation because the financial institution imposed an overdraft fee, a bounce check fee, or a wire transfer fee without your knowledge and without you being prepared to pay it. This can result in an out-of-trust situation when those fees are taken and there's no money in the account for those fees. Finally, as I mentioned before, failing to review and understand the reconciliations performed by the bookkeeper. This is probably the most troubling, avoidable mistake we see at the Attorney Discipline Office because this is the one that can lead to very serious problems. I trusted my assistant. I can't believe she was stealing from me, said every victim of embezzlement, every time. It is often not difficult to detect employee embezzlement. A recent case at the Attorney Discipline Office involved an attorney whose employee wrote checks to herself and just signed the attorney's name. Unfortunately, the attorney was not reviewing the bank statements or the IOLTA account reconciliations and did not notice that he had been the victim of embezzlement for over a year. Had this matter been promptly detected, it would have led to either no or much lower discipline, I should say, for the attorney. Unfortunately, the attorney faced discipline for not reviewing the reconciliations, and in that case, that the account was not being properly reconciled. Trust but verify. Keeping a close eye on your trust accounts does not mean that you don't trust your employees. It means that you are not willing to face the consequences of being wrong about the decision to trust your employees. Keep your trust account checks secure. Your trust account checks should not be available for an employee to steal. Ideally, they should be kept someplace that only the firm's attorneys have access to. Carefully review every bank statement and every law firm credit card statement. If you are not currently reviewing the firm's bank statements, when finished with a CLE program, pull a year's worth of bank statements for your trust accounts. Review all the canceled checks for any irregularities. Every month in the future, when you review the monthly trust account reconciliations, review the canceled checks as part of the process. Do the payees make sense? Do the signatures all look like they were signed by the person who's authorized to sign the checks? Keep a close eye on those canceled checks. Finally, review and understand the monthly reconciliation. Your bookkeeper should be giving you a complete copy of the bank statement, including the copies of the canceled checks, as part of the reconciliation report. The reconciliation report must not only confirm that the balance on the bank statement has been reconciled with the balance in the check register, but that the balance of all the ledger cards adds up to the balance in the account. You should also review the ledger cards to ensure that none of them have a negative balance. The reconciliation report should be very similar to the one shown earlier in this presentation. It should include a list of all the clients or matters that have funds in the IOLTA account and how much money is being held for each client. While you're looking at this report, consider whether or not the firm is holding any money that should be refunded to clients whose matters have closed. Signature stamps. I want to add a few comments about signature stamps. I was recently surprised when I learned that there are still attorneys who have signature stamps for signing checks and even allow employees to use them. Every time I see a signature stamp, I think, please steal from me. If you are going to use a signature stamp, make sure that you are the only person who has access to it. Otherwise, you are inviting your employees to steal from you. I also want to spend a few minutes discussing earned fees as it relates to trust accounts. As discussed earlier, an attorney may not keep their own money in a trust account. If an attorney is holding funds for legal fees in a trust account, the attorney must withdraw the fees as they are earned. If an attorney leaves fees in the trust account, this would constitute commingling. Commingling is a problem because a creditor, such as the IRS, may be able to trustee process or attach the trust account if the creditor can show that it contains the lawyer's funds. There is simply no valid reason to keep earned fees in an IOLTA account. I've heard a number of reasons why attorneys do this, but they all are invalid reasons, like I was hiding the money from the IRS, I was hiding the money from my ex-wife. Fees should be withdrawn according to the terms of the fee agreement with the client. If a matter is being billed, if it is a matter that is being billed hourly, withdrawing earned fees once a month as part of your regular billing process is perfectly acceptable. If the attorney is depositing the retainer into the operating account instead of a trust account, the attorney has committed conversion. Even if the attorney later completes all of the work for the client and later earns the fee, you cannot deposit a retainer into your operating account. You may not deposit a retainer into your operating account, but instead it must be deposited into your trust account and withdrawn as it is earned. As a general matter, non-refundable flat fees are prohibited in New Hampshire as being unreasonable under Rule 1.5. Flat fees may only be withdrawn from the IOLTA account as those fees are earned. An attorney may use benchmarks to determine when a portion of the flat fee has been earned, but there must be a proportional relationship between the amount of the fee withdrawn and the value of the services provided. The New Hampshire Bar Association Ethics Committee has published an excellent practical ethics article dated January 17, 2008, which is cited in the materials and is published on the New Hampshire Bar Association's website. This article addresses what sort of benchmarks may be appropriate If an attorney is going to be withdrawing part of a flat fee before the conclusion of the case, those benchmarks must be included in the fee agreement and must be related to the work that was provided. Personal injury and collections type cases. If an attorney receives funds which are property of both the client and the attorney, the entire amount of the proceeds must be deposited into the IOLTA account. Once the settlement funds have cleared into the IOLTA account and the attorney has paid out the funds owed to the client and any third parties, the attorney must withdraw the attorney's portion of the proceeds as earned fees. As a reminder, Rule 1.5c requires that the attorney provide the client with a written statement stating the outcome of the matter and, if there is a recovery, showing the remittance to the client and the method of its determination at the conclusion of any contingent fee case. Escrowed funds. If an attorney is holding money in an escrow pending the resolution of a disputed matter, the attorney cannot pay themselves out of the escrowed funds, even though the client has a claim to those funds. This situation often arises in a divorce case when an asset is sold and one of the attorneys is ordered to hold the proceeds of the sale pending resolution of the case. An attorney cannot pay themselves out of the funds being held in escrow absent approval from the court. This can be frustrating to clients who may not understand why their ongoing legal bill cannot be paid out of those funds. It can also be frustrating to the lawyer who is holding the money that would be available to pay those legal fees. But absent a court order, escrowed funds cannot be used to pay legal fees for the client. Disputed funds. If the client has a dispute regarding the legal fees that the attorney claims to be earned fees, the amount of the disputed funds must either remain in the IOLTA account, or if they've already been taken out of the IOLTA account, they must be returned to the IOLTA account until the dispute is resolved. The amounts that are not in dispute must be withdrawn from the IOLTA account. So, for example, if you've settled a personal injury case and you believe that you're entitled to a 33% contingent fee, and your client believes that you're only entitled to a 25% contingent fee, you must leave the disputed 8% in the IOLTA account. You must also pay the client the entire amount of the non-disputed funds. You may not hold those funds to use as leverage until the matter is resolved related to the disputed funds. In addition, you must take out the portion of the fees that are not disputed. Having gone over the various rules, let's talk about what sorts of disciplinary outcomes we see with trust account related rule violations. At the outset, I want to clarify that discipline is not determined by the Attorney Discipline Office. Discipline is ultimately set by the Professional Conduct Committee and the New Hampshire Supreme Court. In determining the appropriate discipline, the Supreme Court has stated that they will look to the ABA disciplinary standards for guidance, although they have not adopted those standards. I will add that the most compelling downward departure available for trust account violations is for self-reports. The Professional Conduct Committee seems to be giving great weight to self-reports as a mitigating factor. In cases involving stealing or conversion, disbarment is the most likely outcome. There may be some very compelling circumstances in which a long-term suspension may be possible, but if an attorney is stealing or converting client funds, will result more likely than not in their disbarment. Filing a false trust account compliance certification is a misrepresentation to the state Supreme Court and a violation of Rule of Professional Conduct 3.3. This is a baseline suspension and will often result in a sanction that is more serious than the underlying trust account violation. We have cases in which the trust account violations were inadvertent, they were corrected eventually, and did not result in any actual harm to a client, but for which the attorney receives a sanction for filing a false trust account compliance certification where the attorney knew or should have known that the IOLTA account was not being reconciled in compliance with Supreme Court Rule 50 or being handled in compliance with Rule of Professional Conduct 1.15. Like many matters, lying about the offense is often more severe than the offense itself. Attorneys who have abdicated their responsibility to oversee the trust account are probably facing a suspension, at least as a baseline. This is for attorneys who are not actively engaged in intentional misconduct, such as stealing, but have otherwise completely failed to operate their trust account in compliance with the rules. In cases where the attorney was negligent in handling of the IOLTA account, the likely disciplinary outcome is in the range of a public censure or reprimand. Finally, honest mistakes. Most of the overdraft notices and self-reports that we see at the ADO involve honest mistakes. For example, the attorney may accidentally deposit the client's retainer into the wrong account or may print checks out of the wrong account. When the attorney learns of the mistake, the attorney promptly corrects the mistake and notifies the Attorney Discipline Office. In these cases, the Attorney Discipline Office is likely to non-docket or dismiss the matter or propose a non-disciplinary diversion. In these cases, the Attorney Discipline Office may make some suggestions on how to avoid this problem in the future. At the end of every one of the CLE presentations I do, I like to mention or say a few words about the issues of lawyer addiction and mental health. There seems to be a strong relationship between mental health and substance abuse problems and attorney discipline issues. The Attorney Discipline Office often sees untreated substance abuse and mental health issues with attorneys who have grievances filed against them. A few years ago, 2 important studies were released documenting the levels of substance abuse and mental health issues among lawyers. These studies are profoundly depressing, but also provide a call for changes. These changes will not occur through lip service, but only through active steps taken by all participants in the legal system. I would urge you to contemplate the statistics I'm about to go over, and even if none of these apply to you, remember that they apply to your colleagues, and you can do your part to see that these people get help and are otherwise recognized. So let's talk about some statistics. Based on the wellness study and the addiction mental health study, we have some statistics concerning the prevalence of these issues. Between 21% and 36% of lawyers qualify as problem drinkers, as compared to 11.8% of a broad, highly educated workforce. Depression, 28% of lawyers have clinical levels of depression. 19% of them have clinical levels of anxiety. 23% report levels of elevated stress. These problems appear to start in law school, as incoming law students do not report the same level of substance abuse and mental health problems as compared to graduating law students and practicing lawyers. This is evidence of a strong situational component to the above issues. We are indeed our own worst enemies. Attention deficit hyperactivity disorder is prevalent at a rate of about 12.5% for lawyers versus 4.4% in the adult population. This is interesting because, unlike the above mental health issues, ADHD is not situational, but instead appears to have a strong genetic component. It may be that people with ADHD are more likely to become lawyers. Whatever the cause, adult ADHD is not diagnosed, and there are very effective interventions. I was diagnosed with ADHD as an adult, and this diagnosis was life-changing. If you're the person who has everything piled up your desk and your assistant keeps telling you how scattered you are and how you lose things and how you forget things, this could be you, because it was me. Every state has a lawyer assistance program designed to assist lawyers facing these problems. These programs are confidential and can make a world of difference. Anyone who has concerns about a colleague facing these problems can make a confidential call to the Lawyers Assistance Program, and the Lawyers Assistance Program will reach out to the person that you are concerned about. In addition, reporting matters to the Lawyers Assistance Program, matters are not required to be reported to the Attorney Discipline Office.